In other news, the U.S. banking crisis weighs on the broader markets, with global financial markets flashing red across the board. The slide in the banking stocks deepens as the Silicon Valley Bank contagion risks rattles the markets. Over the weekend and on Monday, U.S. Federal Reserve and the United States Treasury took measures to stabilize the country's banking system, but concerns over the fallout of the collapse of Silicon Valley Bank persist, despite these actions by the regulators.
Japan, South Korea, Hong Kong, China and Indian stocks are all reacting sharply to the SVB fallout. The MSCI World Equity Index, which tracks shares in 48 countries, Asian bourses, plunged on Tuesday, following overnight losses in Wall Street stocks. European stocks had logged their steepest one-day fall this year on Monday. The Dow Jones is down around 4% since the collapse of Silicon Valley Bank. Investors around the world are spooked by the turmoil in the financial sector after the collapse of 3 banks. SoftBank is among the worst-performing banking stock. The Japanese startup investment bank has hit its lowest levels since October 2022. While the debate rages on if the Fed's aggressive rate hikes have broken the banking system, traders have recalibrated US rate hike path bets. Traders now expect the Fed to slow down the pace of its rate hikes after the banking crisis. That is irrespective of the inflation data outcome later on Tuesday. The dollar languished near a multi-week low, and short-dated US Treasury yields plunged following those bets of easing rate hikes. Experts are now predicting more pain for banks and the financial sector. Analysts suggest the aggressive rate hikes by the Fed and other central banks may just be taking effect now. Could more stocks go the SVB way if the Fed continues raising rates? Let's look at the US banking crisis so far. The closure of the Silicon Valley Bank on Friday marked the biggest bank collapse in the US since the 2008 financial crisis. US authorities jumped into damage control mode as the regulator, Federal Deposit Insurance Corporation or FDIC, assured depositors of the now-defunct bank that they could access their money from the newly created Bridge Bank. The FDIC reassured waiting SVB customers that it's business as usual.
So you will be able to transact business as usual. Your account is safe. Your online portals are active. You'll be able to wire and do business as usual. So if you have any questions, feel free to let us know.
Not just the Silicon Valley Bank, but 2 more banks met a similar end: Signature Bank and Silvergate, resulting in widespread fears of a 2008-like economic crisis. After the collapse of under-pressure US banks, customers say it is difficult, but they are hopeful.
We had done all of our fiduciary tasks, so we knew that we were very, very little impacted. We didn't have any problem in terms of payroll and all those type of things, but still, there's still stress and there's a lot of communication internally that needed to happen to relieve that stress. Yesterday, the information coming from the Fed really relieved everybody in the Valley, and even more us, that we will have less issue accessing the funds.
Global financial watchdogs are assessing banks and insurers for any potential contagion risks. The UK's finance minister says SVB's rescue is necessary to protect UK tech.
We were faced with a situation where we could have seen some of our most important companies, our most strategic companies, wiped out, and that would have been extremely dangerous. We have built, over the last decade, the 3rd largest tech economy in the world, after only China and the United States. So it's very important to us as a country that this sector thrives, and that's why the Prime Minister, the Bank of England, were all rolling our sleeves up over the weekend to make sure we had a solution.
Financial markets are falling quite sharply. I think there were initially hopes that the rescue of depositors with the American arm of Silicon Valley Bank through to a federal-backed, almost kind of insurance scheme, and the purchase of the UK assets by HSBC would calm markets contain any worries over a domino effect across other banks. Now that hasn't happened yet because banking shares have had a big upward gain over the last 6 months or so, and investors are worried there may still be concerns over bad loans in the tech sector or poor asset quality at the banks, which means they're not perhaps quite as sound as some people would like to think that they are.
The Indian government is going to take stock of the situation, with Minister Rajiv Chandrasekhar having organized a meeting with Indian startups on Tuesday to understand the impact. Earlier, some big venture capital firms, including Peter Thiel Fund, had advised companies to exit Silicon Valley Bank. Bureau Report, WION World is One.